Stock market today analysis for Tuesday, March 14th, 2023. I've got the window open because it's really rainy here and my apartment is really humid, so I'm letting this breeze flow in, enjoying the rain. If it's a little bit noisy, my apologies. In the description below this video is a link to iofsuccess.com. If you have kind of busy life, or if you're relatively new, and I guess it's an and, or if you have a busy life and you're new to the stock market, you're going to love this strategy. This strategy it's not very time consuming. Now, there are some moving parts to it, so it's not simple, but overall, once you understand it, it's easy. To give you a better idea of understanding that, I'm going to put a link to a video right here at the 1 minute mark. It's going to be popping up at 1 minute. You don't have to watch it right now. You can come back and watch it later. That's why I'm putting it, boom, you see it right there in 1 minute. That's why I put it at the 1 minute mark so it's easy to remember. That video gives you not one, not two, not three, not four, but five. Count them, 1, 2, 3, 4, five. 5 reasons why you should be doing this strategy. And I'm pointing this video out to you because when you know why, figuring out the how-to becomes a lot easier. So check that out. We got free stuff, YouTube video, YouTube playlist in conjunction with these downloads. We got paid stuff. You want to talk to me one-on-one over here, contact us. Us is me, myself, and I. One of us will get back to you sooner or later, except if you're hitting me up to try to sell me something. It might take me a little bit longer. Let's get into looking at, we had consumer price index month over month. We had consumer price index year over year. And we had core consumer price index month over month. Now let's really make sure we understand what this EX means. Because core, to you, what is core? If you think about exercise, what's a core? It's like the middle, right? The center. Do you have to eat food, let's say, at least every week? Yes. Do you use energy at least every week? Yes. So you would think that's the core, right? You would think that's the core to your life. Well, the people that make the rules that you got to follow, they said, no, we're taking that stuff out. So, batteries, I guess that's kind of in the energy, but I don't know, I'll see a lamp. Our lamp's more expensive this year, or whatever. What's their time rating here on this one? Month over month, our lamp's more expensive this month than they were last month. Because when was the last time you bought a lamp? Me, it's been a couple years. But I tell you what, I bought some food. Actually, I got to go grocery shopping. And energy, man, I keep buying that gas. But anyways, so just realize when you hear this core, it might make it sound like your basic necessities of life, but it's not. It's like everything but your basic necessities of life, because that's how they do it. Then we got the core producer price index coming up tomorrow. Core retail sales. Who knows what they strip out of that stuff? Empire State Manufacturing Index. Producer price index month over month. Retail sales month over month. And we got a bunch of, we just like nonstop from Tuesday to Friday. All these announcements. However, what has seemed to move the market the most is stuff that's going on with the 3 banks that went under. You probably heard about those. Started with Silvergate, and then went to Silicon Valley Bank, and then what was it? Signature Bank. With Silicon Valley. With I think the one getting the most news. At least we can see it right here. We got 1, 2, 3, 4 out of 1, 2, 3, 4, 5, 6. So 4 out of 6, it's either abbreviated with SVB or just put up, just like totally spelled out. So as I said yesterday in yesterday's video, G. Edward Griffin already in like 1997 I already told you in chapter 2 what to expect, and it's after that it's up to the individual to be smart enough how to figure out how to make all that stuff happen. And chapter 2 is the name of the game is bailout. They can call it different names, just like if you were in a street fight and you knock somebody out. Kind of doesn't matter if you used a jab, an uppercut, or a right cross. You knocked them out. The end result was the same, and it came from punches. And you could say, well, someone could say, well, man, you punched that guy. And no, I didn't. I uppercutted him. And maybe someone might be dumb enough to, oh, you didn't. Oh, okay, you just uppercutted him. One time I remember this guy in the military, he had this, it was the first time, it wasn't a switchblade knife, but it was like, I forgot how exactly it was working. And I was like, oh man, the military lets you use that? He's like, well, one time one of the officers asked me about it and said, you can't have switchblades. And the enlisted guy told me that he told the officer, no, sir, this is not a switchblade. This is spring assisted. And then the officer was like, oh, okay. So, if you want the wool to be pulled over your eyes, go for it. And but what I would suggest is being sharper to what these what different terms mean, and also net results of things, and try to put those together. Because overall, if the net result is a bunch of stuff going up, and they refuse to call it a bailout, but you're getting the same net result of a bailout, then whatever. Chapter 2, name of the game is bailout. Well, we got more advancers versus decliners. We still have a tremendous amount of stocks making all-time lows, about almost 80% below the 50-day moving average, 65 below the 200-day moving average. With here's our line chart for the S&P 500 on a weekly, and I don't know if it was towards the end of last year. I think it was a mixture of towards the end of last year and also the beginning of this year. I had been mentioning how I wouldn't be surprised if we grind sideways out of this bear market. And so far, that's pretty much what I see going on. It doesn't mean that it's going to go sideways forever, but at the moment, really until I see something decisive go over the 420, basically from 420 to 440. I want to see what happens through that range if it ever gets up there, and also what happens from basically 380 to 360 if it ever goes down there. But so far, since about right in here, right, I get it went a little bit under 380 right here, but overall, since about right in this area, we just basically have been between 380 and 420. With 400 being kind of smack dab in the middle. And let's do this real quick. Are you guys familiar with the volume profile? We'll switch this over to S&P 500 instead of the ES, just to try to keep apples to apples, even though they are pretty darn close to being the same thing, but the ES is actually the futures. So we will down in here at this volume profile. So this is a 1 year from left to right, 1 day candle. Look at this. So this is showing us, for this time frame selected, this is where your mass amount of transactions have been, right around the 400 mark. Now we're looking at 5 years weekly chart, so it's going to look a little different, right? Because it's giving you the volume profile for a longer time. So now we're down here, but you still see this around in this 400-ish range. So let's take a look at the monthly. All right, so now we're looking at 10 years, and in a 10-year volume profile, it's down here. But what's probably going to in the next couple weeks at least, this is the one that's going to be given the most pull. So what this is giving us an indication of is that right in this area, right in the 400, a lot of transactions happen. So that would kind of give us an indication that we shouldn't be surprised if it pulls back up to the 400. If it gets up here, starting to get sort of in this little gapish area right here, trying to get up to 410, don't be surprised if it pulls back to the 400, which might be why we're seeing a bit of, I don't know if it's why or as a result of, but we are seeing this kind of sideways motion, between the like the 380 and the 420, with the 400 kind of being in the middle of there. Let's quickly look at, this happens to be the different sectors. Since it's already pulled up, we'll take a look at those. So let's do it a little bit differently. Okay, sideways 200-day moving average, sideways 200-day moving average, sideways 200-day moving average. Right? These are the three big indices, three big sectors of the S&P 500. And 200-day moving average sideways, right? This one's above the sideways, this one's below the sideways, this one's below the sideways, which is kind of giving a mixed, mixed signal, right? But if you got three things kind of mixed, it looks like, they're definitely not all in alignment, right? Which I think is, we're seeing this lagging indicator of the sideways 200-day moving average. Volume is strong with, look at these, all these different sectors, lots of volume coming in there. Where does, what this volume, especially when it's green, that means buyers, right? Who's buying? Who feels super comfortable? And see how it's down like this? This is massive, all across the 12 different sectors. Massive amount of transactions. Who could that be now? Who could it be? Who could it be? It's got to be somebody, right? It's not just somebody, maybe some institutions, hedge funds, family offices, pension funds, plunge protection team. It's got to be some bigger money. Usually you and I are not going to create results like that. Looking at the this is the general markets. Dollar, right, hit this 200-day moving average and moving down. Bonds kind of moving down. Gold took a shot up and pulling back just a little bit. Bitcoin took a shot up, and interestingly enough, we'll look at the oil in a second. Look at how we just ended the weekend, beginning the week with definitely the opposite of financial stability, right? However big this problem is, we'll leave that off to the side for a second. But let's say if your monthly bills are $2,000 a month, and let's say that's everything. Like, that's paying your debts. That's everything, right? For you to live exactly the way that you live, your monthly bills total up to $200, including all the food you eat, everything. And let's say you net $10,000 a month, so you got an $8,000 surplus, right? That's financial strength right there, right? So when you have banks that are like failing three in a row like that, that's an indication of the opposite of a lot of financial strength, right? Now we can bicker and debate, and what is going on is a lot of bickering and debating on how big the problem is or how small the problem is. But nobody's bickering and debating that failing banks is a sign of financial strength, right? So here we are. We're in a situation where at the minimum we know we're showing signs of financial weakness for the country, and market's moving up. But oil is taking a move down, Who would have guessed it? And so ultimately, the point that I want to get across to you right now is understand how much money you have in your account. And the relationship to that money in your account has to do with the various positions that you have open, the margin requirements for the various positions you have open. Because in a way, to really overly simplify things, and the macro guys, all the people on YouTube, all the talking heads on all the different news outlets, they probably wouldn't agree with me on this, but let's just keep it really, really simple for you and I. Just basic people here. In a way, these banks are failing because they can't cover their margin, right? So you don't want to do that. You want to learn from these banks' mistakes and understand, how do you avoid falling apart like these banks are falling apart? The way that you do that is having control of your margin. So, for example, if you are selling put options and you have the money to buy the stock that you're selling the put option against, let's say you sell one contract, you have the money to buy that 100 shares of stock, right? Then it's good. Then you're good, right? Because that's your commitment. Your commitment is to buy 100 shares of stock. You got the money to buy 100 shares of stock. Now, let's say you decide to open another position and you sell a put option on a stock that you do not have enough money to buy 100 shares of. Now you're starting to do some speculation. You're starting to maybe what some people call gambling. You are, at the minimum, you're opening yourself up to more risk because of margin requirements and things like that. So be aware of those. Be mindful of those and figure those out. Do not expect somebody on YouTube to tell you exactly what you need to do. You start integrating these concepts into your own life so you can start answering the questions for yourself. If you do that, if you're that type of person, you and I will be good friends. If you turn to YouTube, if you turn to financial advisors, if you turn to your religious or ideological leaders and you expect them to tell you exactly how to manage your margin requirements, you and I are not going to be able to hang out. I don't hang out with people that can't figure out things let me rephrase that. I don't hang out with people that cannot make decisions for themselves. I get it, we have to get information from other people, but I hang out with people that can make decisions for themselves. I don't hang out with people that need to be told exactly what to do in these type of things, right? I don't hang out with people that look at other people for all their answers. If that's you, hey, I appreciate you watching the video, but I'm just letting you know you and I will never be hanging out. Now, if you're the type of person, though, that can think for yourself, you want to think for yourself, you don't want to turn to other people to give you all these answers, and you're willing to do some mental work, you and I could probably be good friends. So do that. Think about how much money you have in your account, in whatever position you're going to put on, what sort of margin would that take? And look at a risk graph and play with a risk graph and figure out, if this position does this, how much margin is that going to take? How much money do I have in my account? Da-da-da-da. You play with it like that. Let's take a quick look at the futures. Okay, futures, a lot of volume, right? A lot of volume. There's some organizations, some entities, some people that have some cashola. They're doing stuff in the market right now. A lot of volume, but not much movement. But these candles are just starting for the futures. Let's take note of this, though. We got a bull candle right here at the top of that candle, at the top of that candle, at the top of that candle, at the top of that candle. Let's see what's going to happen. It's early. It's like 4 o'clock Hawaiian Standard Time. So that means it is, give me 1 second. Let me check here. It is 10 p.m. Eastern Standard Time. So we got quite a few hours for things to go up or go down. What else do we need to look at? Let's call it a day right there, because I really want to drive something home for you that I believe is the most beneficial thing if you're a person like me. And when I say that, if you're a person like me, I mean that you want to be able to make good decisions for yourself. You don't want to be stuck relying on the suspect opinion of other people. Even if you trust these people, right? You want to be able to make the decision for yourself, right? The whole idea of teach a man to fish, teach a woman to fish, teach a they, them, their, whatever up to fish, and not give a human fish, right? Now, if that's you, the thing that I really want to drive home, and hopefully this pen will pull up quickly, is about the margin requirements. So let's say you've got $10,000 in your account, right? And let's say you open, so that's how much cash you have in your account. And let's say you open a position and it takes $3,000 of margin or buying power, or whatever term you want to call it. Don't be one of these people that's not able to see the forest for the trees when they're getting caught up on arguing on, well, margin, this is buying power, blah 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 blah. Just try to figure out what I'm talking about here when I'm showing you. So if you got $10,000 account and you open a position that takes $3,000 of margin, what does that mean? That means you got $7,000 left. Now, I understand that that it's not this cut and dry when it comes to margin. Like, maybe if you got $10,000 in your account, you technically, they'll give you 20 or something. So let's just look at the cash, right? So you're using a position that $10,000. You got this position. It's you open it up. It's using $3,000. That means you got $7,000 left. And let's say it's like a whatever. It doesn't matter. You pretend you fill in the blank. Now, if this position starts moving against you, then this number is going to increase. Right? This number goes up if this position moves against you. So the position you originally opened, let's say now, let's say it's at 4,000. So then, that means, you're probably doing the math, you got 6,000 open here, or left, or however you want to say it. So, be strategic about this stuff. This can get you into trouble. You want to be able to manage this. And in a way, what happened with these banks is it's not super far off to say this is an example of how those banks end up running into problems. Making promises, making commitments, doing things that they didn't have enough money to cover. So that's what you want to be able to do. And a lot of times when you're learning different strategies and stuff like this, the focus is more on how much money you can make and these type of things. And sometimes there's less focus on exactly like, hey, how much money do you have in your account? And how do I control this whole overall thing? Have you heard of this idea of an account blowing up? It's usually like, it can blow up because this number, this 4,000, goes above 10. And the broker's probably going to close you out. You guys, I hope you have a fantastic day. I hope you have more than a fantastic day. I hope you have a fantastic week. The week turns into a month. The month turns into a year. The years turn into a lifetime. Aloha.